So what we'll focus on today, we'll do a little bit of wombo combo. We'll focus a little bit more on entry and sort of what we're looking at in terms of trading objectives, what we're expecting, and then go from there. We'll look at narrative, but today I'll be primarily focused a little bit around the wombo combo and price expectations. Okay, so let's hop right into it. Right, we've got uptrend, we've got failure, at least so far. Right, now this failure has to break above. This is not part of structure. I expect this high to get taken on the 15-minute. That one there. And then we essentially need to break this one for order flow on the 15-minute, which this is already done. So at worst, we're entering a range. At best, we're going to just fly off of this, tap back down here. Right? So when we're looking at wombo combo, typically the first 20 minutes of the day, I think offers the majority of volatility that we want to avoid at times. You'll find that you get these nice sweet model trades, but when we're looking for retracement with the trend, volatility essentially can be both a benefit and a drawback, because, for example, if we were looking at a retracement here, this hasn't broken structure yet. With volatility, we'd probably knife through it even if we didn't take this low. So I avoid drawing them in the first little bit of the day because I want some sort of higher time frame structure to form, right? Whereas we're looking for internal failure. This is likely inside of our wombo anyways. Oops, wrong way. All right, so if we're drawing it from here, for example, like, yeah, failed, but as you can see, it's snapped through, right? So what does that mean? What it means is that you will find a much higher win rate with this system after 950. Price tipping its hand, and then we have some sort of reversal coming in, right? The main question with the wombo combo really is when to start drawing your lower time frame retracements, right? Because those are the ones that have ridiculous risk reward, and those are the ones that we want to really get to be a part of, right? So for example, this is tapping into probably an area here. I think that we get a little bit of sell-off if we can't break above. We've got a little bit of lethargic price movement though. If this can't break, then we likely at least retest this SNDR, and if we can't hold that off of the 930 push, then we go lower, right? But right now we're clearly looking long. We've had our 830 news, violent, but it's got to break. It's got to break something above here, otherwise we continue lower. So we'll play this a little fast up until about 940-ish. See whereabouts we get to. Actually, why would I do that? I don't know. Just do this. There we go. There we go. Okay, cool. Deleted all my lines. So, lethargic price movement down. Why is that not letting me go to the right? Why is that not even letting me bring up a data series? There we go. Okay, so that's all good. Good. There we go. All right, so lethargic price movement, we broke above, awesome, right? And now we're trading down. We've got this area. If that breaks, then we head lower. We've got the midpoint of our manipulation leg that we're looking at. We've got potential here, which is just underneath. I think that's valid. And we're going to be looking for potentially a wombo combo. I would probably look at where the energy of the move came from. So in this case, we're looking at this low here. And we're looking for a trade which aligns with the SNDR. Now, I think this is high probability. We'll likely get a bounce out of this. So if we're forecasting essentially how we expect price to go, we're trading back into here. We've got two different options. Actually, move that over there. We get our bounce, and that continues on, and we see something like this, which forms lower time frame structure, which would then break that high. Or we've got this tapping in, we get a little bit of a bounce, which fails, probably at the pocket of this move, and then that continues lower, and we're looking at this SNDR, which then should offer us something. Whether we continue lower or not from there is depending on how it reacts to this zone. If I had to draw something out right now, we're looking at something like this. Obviously, we're looking short, but you'd also be valid to take long from this area. I'm just concerned to see if it liquidates because of this higher time frame push into it. But I think you get a bounce out of here for sure. Right, and the only reason I would look short is because we have objectives lower that we likely haven't reached into yet. So as price gets, so we're getting our bounce. We've got to definitely clear this high at 2025. Failing to do so would be a potential short scalp. Right? Where price is failing to go above our last structural bearish candle. Right? So who would be passing on this trade, right? With your guys' current ideas, who's more looking at something like this? Who's avoiding the short? Who's looking for a long, etc.? Right? Personally, I think that the majority should be waiting in here for that long, especially if we get some nice inducement. If your mentality is more scalp heavy, you're looking for the trade back down into it, but the high probability trade is the long out of it. Right? This will likely form a swing, and then we're looking for some sort of failure. Even if that failure only trades back down to here, you'll likely get a high probability trade back down to the 23.6 of this move. We'll go with 20 points on this. Right? And then my stop would be just above here. I don't want it. Like if it's going to tap into here, especially if it gives me inducement, I don't want it. Like I'm not risking the high. That's not relevant to me. That doesn't make sense to have that kind of stop with these location trades. Right? We're either right immediately or we're wrong small. This is actually setting up quite nicely. If we get an inducement above this candle, that would be a beautiful short for me, and that would be trading back down to this area here at minimum. Our concern's the imbalance, right? So right now it would be ideal if we trade into this imbalance, we respect it, and then go higher. That's your low probability long, because essentially you're betting that we get lower time frame structure after this movement back in. If you're long from here, you're happy. I mean, yeah, you could probably draw like a midpoint of this zone that you got a bit of a movement out of. But I want to avoid something like this. Okay, so this is setting up actually really nicely for a short. Let's see if we get something up higher. Slow this down. We're at 950 as well. So let's pause it here for a second. I see a lot of people kind of getting chopped up in this. And so we've got our swing that's happened here. People will look at something like this for a wombo, and I think that's decent for a scalp, maybe. But you're expecting higher prices on a retracement. So the low probability would be something like this. Or lower probability, I should say. Right? We tapped into our wombo, we delivered higher. Equivalently, what happened on the short side? Right? We didn't actually hit this area yet. So when you're scalping, let's say hypothetically, that your area was here. You were drawing it from 50 and this didn't trade into it yet. And we've delivered here and now we're coming back down. This is a void at all costs. This is a void at all costs. Why? The market's already tried to rally and it failed. Why do we think it's going to try to rally again and succeed? It's already tipped its hand. It's attempted to do something and it failed miserably. Right? We've got our high here, but what part of structure is this? Is this a 1 minute structure or is this an intermediate time frame move or a higher time frame move? So what do we got? Where to go? What the hell? Why did the chart just disappear? Excuse me? All right, this is... It went down to minimum 0.25. Yeah, I don't really know why that's okay. Maximum, I don't know, 15,600. We'll just do this. Thank you, Ninja Trader. So let's try this again. This is the weirdest thing I've had to deal with. Yeah, I don't get it. There we go. That was hard, wasn't it? My God. What happened on our 15-minute wick? Is that what we want to see to be risking off of this movement down? No. This tells us we want to go lower. Likely down to here. Possibly even lower than that. That's quite the failure. Let's actually double this chart. Just so I don't have to deal with this nonsense. September, and go with our black and gold. There we go. Okay. So our 15-minute clearly failed. Actually, I can't even handle that. So sorry, guys. I am a little OCD with my... This is also why I don't chart on Ninja Trader. There we go. All right. So, major failure on the 15-minute. We're still looking lower. Let's draw out our wombo that we're looking at. We've got this here, but that's very rough failure on the 15-minute. We could actually be looking at something like this of a measured move, which would take us down to the origin down here. In this case, it would be 408, right? Possibly. That's quite the 15-minute leg. Either way, what I'm trying to implore is that the market's attempted to rally here and it failed miserably. It didn't give us an area for a short. You could argue that this gave some failure after failing to break this high, but I think that's like a C-level type trade, right? We're looking in this consolidation. We're not eager to short inside of here. Now we've got 22 seconds on this candle. If it closes here, you can bet that people will be taking the breakout. What is going on with this playback? It's still at 38. There we go. My God. There we go. Okay. Right? So people very likely shorting the close of this, failed to go higher into our area of interest. Now, we've got our inducement. We don't have lower time frame inducement. So these can be a little bit tricky. If we're looking long in this area from this lower time frame SNDR and we've got this violent movement, if you're taking a trade from here, this is very violent, right? So say we're going long in this area and you've got a 10-point stop, right? Let's say we were long hypothetically from here, right? Let's just say right now we're buying this, right? And we're looking for potentially a trade back up. You know, you get your 23.6 here. At least trading back into the prior swing, I think that's valid, right? We're right immediately or we're wrong, right? There's no chopping around in here with consolidation. If we see that, we're not happy. We want it to essentially be finished business and immediately out. Right? So if you're taking these trades without inducement in location, you've got to be very, very aggressive in where you're taking your stops out, right? So you might even like have like a 15-point stop on these. Or you're getting some sort of movement that you want and then you immediately break even because you want it to be in here and out of here. Right? Personally, I need to see something a little bit more conclusive than this. This might even take out our 15 points. Right? And then you start to see buying come in. Like, if this trades back in and respects this area, then we like immediately move our stop up. Right? It's now swept this liquidity. Okay, this is looking better. We essentially need a push down to fail, trade through, and we're determining what goes on with this imbalance. We're nowhere near out of the woods yet. Nowhere near. But you have to be extremely aggressive with your profit taking and everything on this. Usually if I'm taking a location-based trade, I actually have my finger on the close button. Right? So we're getting this movement. We're going sideways. We want this bar to close bullish, and then we want to see what happens with, right? So we would probably move to break even now. However, what's our likely scenario? This might not be a trade you guys take, and that's fine. However, should this candle close, say right where it is, we got 7 seconds, so whatever it ends up doing, say it closes here, you're probably closing out of the trade. right? Because we have to trade all the way up above this SNDR just to break order flow, which means that the likely scenario is we trade up into this imbalance and then we come back down to our entry. And if that trade back down fails and we get something like this, now you've got something to risk off of, and there's no need being this aggressive. However, if we go sideways in here and we're not seeing eagerness, we're not married to this zone, even though it's an SNDR. Does that make sense to everybody? I'm seeing a lot of questions in my DMs about these aggressive type trades. Right? It's far better to wait for price to tip its hand. What's it tipping its hand right now? It's tipping its hand that it wants to trade lower. Then you can anecdotally say, okay, well, this makes sense to me, trading above this SNDR into here. We got our prior zone. This is a lot of volume. I'm on board with that. I'm on board with that. The only way that you would avoid something like this idea, where this is going up to here and then going lower perhaps, is the fact that we are unloading on a higher time frame. So we can take longs, but our objective's definitely lower, whether it's the midpoint of this zone, which is fair, right? We've almost tapped into it, or the origin itself. So personally, if this trades in, respects the imbalance, and then leaves, I'm gone. Right? And that would probably be like through this candle here. Obviously, this is a lot of what we want to see. Right? So my stop now goes underneath this. There it goes. And occasionally that will mean that I miss trades that go monster. But you'll find your backtesting that that's actually far lower probability. We're looking at price, expecting price to respect the imbalance if we continue delivering with the higher time frame, which we are. All the way back down to our entry. And you'll notice I'm not going to take a second entry in this. I'm going to wait for something a little bit more conclusive. Right? Now, if we get a trade back up here above this SNDR, which would be 507, then I will short that. If we get inducement and failure. Right now, price wanted to go higher. Right? Wanted to go higher. We're now retracing down. We've got our Wombo area, yes. Right? I'm not looking at the points, right? The volatility on this day is great, right? But that also means that your stops are at risk as well. On days of high volatility, say you took a trade at 80 here inside the zone and this traded all the way down to 58. That's a 22-point stop. So you have to size accordingly on these days, and it's nice when you can get 10 to 15 points. This was what, 13? But you'll notice the curve getting in on the way up much better than taking just an entry-based trade in here. You've got to look at order flow and look at what we're avoiding right now. That's an important concept. So failure isn't just sweeping and failing something. Right? Failure has to do with the response that occurs. So people will see, oh, well, it swept this, so I'm involved. But when do you confirm that being failure? You confirm it when the attempt to continue cannot continue. That's failure. Not just the sweep itself. The sweep itself has to do with risk reward. Does that make sense? This continues, we get a spike down here because a lot of people were interested in this. right? And I mean, yeah, anecdotally we could, no, well maybe it's this, well maybe it's that. I'm going to wait and see what happens with this low. More importantly, I'm going to see what happens with this area here. People talk about risk reward a lot, right? Say we hopped in here, we had a 15-point stop, and we closed this for 13 points. That's negative, well, that's less than 1-to-1. That's the wrong question. The right question is, what's the expectancy of your system? Right? Do you expect to make money over a course of 10 to 20 trades? And if you don't believe that, then if I asked you if a system with risk reward of 4-to-1 was profitable, you wouldn't immediately say yes, would you? Because you don't know what the win rate is. The win rate's 10% and you're risking in 5-to-1, your risk reward, you're still unprofitable. Yeah, people will be buying the origin here, absolutely. What are we looking for? This has got to go all the way up and close above this just to create a swing. Right now, we're respecting this imbalance. These are short scalps that I would take, right? Because our objective is lower until proven otherwise. I think that we're getting a lot of interest long for sure. But until it achieves something, I can't draw any retracements or anything to get involved in the trend with confirmation. And yes, you can argue that a long from here to here is valid. What is that? 45 to 59? That high? That's 15 points. Why not? Who's long biased right now? Would you be long or would you stay long right now? Or are you still looking short? Okay. So if you're long, say you're long from in here, right? You don't want to be long from here. You're longing into an imbalance. That's low probability. You don't want to have the market do a low probability event in order to make money. That's the definition of having a frustrating, if not losing system. Right? What happened to people that longed into this imbalance here? Seeing a bull bar. No bueno. They might have made money in this one, I suppose. Right? This is obviously a little bit different. You've got sustained buying, reaching for an objective. But even then, like, imbalances being filled is not disrespecting. Disrespecting is a closure above them. Filling them is additional information compared to something like this that didn't get filled. Right? But this is not disrespecting this imbalance here. This imbalance broke this low. Right? You're looking at a liquidity pocket above this high, and hopefully we reach for that for those that are looking long. as it stands right now, this is still short. Right? Now, what's our guiding principle right now? What are we looking for? We're looking for price to tip its hand long. Whether your system is shorting in here or in here or here or that close or this close or whatever, if that makes you money, awesome. Right? If it's not broken, then don't fix it. Personally, I'm not interested in shorting this low because now I'm expecting a low probability event of taking this. That may very well happen, right? In fact, if we continue failing here, it's more likely than not. Right? The last bit of liquidity is underneath here. And if that liquidity gets taken and we don't see failure, we take this low. What we're looking for, right, is the alignment of our time frames. Oh God. Okay, that's good. We're looking for the alignment of our time frames. Are we bullish or bearish in this? Right? We've had a long retracement. Spikes down. We've got a nice bit of structure that's created here. SNDR broken. We've now broken it. This is the trade back down. So if we're going to go higher, typically what happens is we clear out non-structural lows, right? Now this one was taken this morning. Be interesting to see if we get our higher time frame double bottom. This is a very common pattern, especially in the Wombo combo, right? We've broken structure. We've traded once back into the area of interest. What do we find? Strength. We then defended that area, continued higher. We've now taken this low, the last non-structural low. This is a higher time frame one here. So if we clear everything out and we get failure in here, that's a very strong movement to the upside. Right? This failure here above this high is telling us it wants to go lower. Likely because there's some resting orders maybe underneath this low. We'll see. Right? So this is our intermediate time frame Wombo. We've got this low for sure. But we're waiting for price to tip its hand. We're looking bullish because of our intermediate and higher time frame structure. Now we need what? We need price to tip its hand that we're going up, don't we? We haven't got that yet, but we will patiently wait for it. And your guys' job in this backtesting is to determine what that looks like for you. Right? I'll explain what it looks like for me, which is sustained buying pressure and the inability to go lower. We have no inability to go lower in here. Here was your retest of this area. Blasted through. Traded up, blasted through. Traded up, blasted through. Certainly not tipping its head yet. And you'll find that when it tips its hand and gives its retracement from the area of interest and the energy of the move, that we will likely get explosive type price action if we're aligned with our higher time frame. Yeah, I mean, and why, right? Why? It's because what happens, right? We focus a lot about our ability to attack the market, to get involved, to have no drawdown, to be in at the area of interest. Cool. But the trade management focus, that's major leveling up. Because essentially we're saying the narrative's done and it's much easier to get involved knowing we're going lower rather than trying to pick the top. And your accounts thank you as well. But we also don't see a lot of education and discussion on what that failure looks like, that attempt to trade lower, because it's contextual, right? This did sweep below here, but then what happened? We traded higher, we closed bearish. There goes that low. Nothing tipping its hand higher. We're now at 10.07. We're now at 10.07. So what's our first sign? If this is going to fail underneath this low, right? Remember what we were talking about on the 15-minute time frame. This double bottom of our higher time frame. We want a strong response, right? What does that look like? Quantify it. We get a closure above this, or do we just expect to trade above this? We have our SNDR here. That's your fractal SNDR. Right? This was the area that the market made a decision to trade lower, higher, blast through that low. At minimum, we should trade above that. If we tap into here and respect, we probably go a little bit lower. Right? We don't know how far. This is the 15-minute that's driving this. It could very well take this low up. I certainly don't want to be long in an opportunity to then have a 30-point stop maybe. Valid low. Okay. Valid low would definitely be the first necessity to really expect this to go. Otherwise, we just continue lower. Okay, there goes that SNDR liquidated at least. You'll notice this was violently higher. Be interesting to see if we take this low at 407s. I'm not involved yet. That's a pretty good low. That's a pretty good closure now. If you're long, where's your stop? It's got to be underneath here, doesn't it? You're not going to put it underneath this low. You're expecting this to trade back down. However, what's our personality change? We haven't seen consecutive strong buying since up here. That's quite a bit different, isn't it? These are things that we can see, but now we quantify them. Why do we quantify them? So we can make consistent decisions. That's where our consistency and our profits come from. Right? Anecdotally, we could trade back down to this fractal and find some strength. But in reality, we've got nothing part of structure here. Your 15 minutes still has 6 minutes left in its candle. Here's your 5. Right? You got 54 seconds left in this one to see if we create an imbalance and then tap into it. Good for me to start adding longs, okay? So this is what I'm looking at. Where's our order flow? We've got our SNDR, okay? That's like the first minimum thing to look at. Get rid of this. We know we're inside of our 15-minute Wombo combo area. Cool. We've taken this liquidity. There's a lot we like about the long potential to trade at least back up to here. That's about, what, 120 points-ish? Where's our change in order flow? We're looking at this high. 28.50. Right? Why is that important? It's not important necessarily for, like, if we do something like this, that's possible. Now we're looking at this being a manipulation, like especially if we close above this at 28.50. That would be great. But what about for drawing our areas of interest? What if we just make a fractal in here that breaks this area? How important is this zone now? Because our expectation of price, if we're going to go lower, is we do this. So now we're starting to form expectations of narrative. If A, then B. If A doesn't exist, then we've got a different scenario, right? If we get that fractal and we leave, now we've got an area of interest that we're expecting strength. Why? Because the market made a decision here to not continue the downtrend above this order flow. That's a lower time frame break of structure. And then what do we have? We've got this area from this low, the energy of the move. Ideally, what happens? We get, say, this area ends up being that. Maybe we've got a high here. Now we're starting to project out whereabouts we expect to trade back down into. This is where you start getting really fancy with the Wombo combo, where you're starting to predict where this is going because you know where the market should return to if your thesis is correct. If we don't break this high, right, or we break this high and then immediately have violent movement closing underneath this, now we've got a bit of a different situation, because that's not what we want to see. However, if we want to get long, we need to have very specific criteria because we're buying the break of trend, which gives us an excellent risk reward. But right now, it's low probability. It's low probability because we're in a sharp bearish movement. Does that make sense to everybody? Or am I just spooling nonsense? What we're looking for, ideally, is an attempt to the market to fail. And a failing. Really. In fact, we got exactly what we were looking for, didn't we? Now we're getting excited. Because now we've got 15-minute failure, we've got our double bottom, we've got a break of order flow, we've trading back into this area. This is our intermediate time frame SNDR. I don't know where that high ended up being. What did we say? Up here at like 460? That'd be pretty cool. We're looking to trade back down to this fractal. That's the fractal that broke order flow. That's our lower time frame SNDR that made a significant market decision. I certainly wanted to trade above this high. That's your last predominant one, I think, after this. Right? 49.25. If I was long, this would be a target for me. There it goes. Do we get our trade up? Who's feeling ballsy? Are we shorting down into it? After 6 bull bars? You better not. You'll probably make money. Probably make money, but my God, if I get one more message that's like, yeah, just don't do it. Please don't do it. Mother of God. We took that liquidity as well. 55, 56, smallest to the left. No inducement, nothing, just YOLO. You probably have a 5-minute imbalance or something that we're tapping into. There's probably some sort of objective, right? The market just doesn't reach up because it wants to go to 56.50, right? There's something, whether that's the measure move from here to this area that's responsible or whatever, right? So we're looking right now, we've got our last structural bull bar. We traded underneath it. We actually failed to close underneath it. Should this candle fail, that's actually a pretty decent area to look at, because now we're failing to create a valid high in this swing. Right? You'll notice we do create it. We've got this tapping in. Now, let's go over this, because I'm very interested in longing out of this area. What are we looking for? What's our A plus? Our A plus is inducement. We get buying, ideally something like this, and then we sweep them out and we go. Right? That buying typically will not create a valid low. If it creates a valid low, you have a much higher probability, I would say about 80 to 85%, that, like, if this, what do we got, 30 seconds left? Say this candle closes here, and then we just give ourselves like a sweep model trade that closes above this candle. The chances that it comes down and then liquidates that valid low is much lower than if we get a trade that comes up and fails above this high, that then trades lower and then goes. That's your sort of A plus trade. So there's two ways of playing it, and that essentially comes down to your risk appetite. I'm very aggressive. Mikey's a little bit more conservative, but he has a higher probability of success. He's a legend. Right? So, what you're looking at is, if we get our trade into here and it trades underneath this, that to me is go time. And then I'm monitoring what happens in here. If we create a valid high, then we're away to the races and we're stopped, break even, or whatever the case may be. If we get a valid high and the trade back down fails, then I go to break even. Right? But there's the possibility you have to be aware of that if we're taking this trade, that it could just trade in and go. Valid low. We've already created a valid high in here. Did I say valid high? Okay. Yeah, I'm looking at this move should create a valid low, and we go above here. And then by extension, we trade back up probably to this, right? Because where's our intermediate time frame Wombo combo? The area that people will look at for shorting, right? You're probably looking at something like this here at 13, which makes sense to me. We should be trading up here anyways. So now we're stacking confluence where people are, or algorithms or whatever, are putting sell orders here. Where do you think the market's going to gravitate to? So now we've got targets. Love it. Right? And now we're determining, using our narrative and our skill, how we're going to trade back into that. Is it something we can get a hold of? Can we be a part of it? Can we effectively manage our risk? Right? So I'm actually going to slow this down. It looks like we're diving into this, and I'm going to take it here. Right? So I have a 10-point stop. I'm actually going to be extending this profit target and we'll see what we end up getting, right? And we'll manage this appropriately, right? But I'm expecting this to be objective finalized and go with the expectation that this is an aggressive trade. This should close above here. And if this trades up and fails, then I'm gone. And I'm looking at doing that right now, right? We're up 17, 19, like this is flying. We're obviously, in this case, like great, right? What more could we ask for? You know, should we go break even? Let's actually pause because this is important. Now that we're seeing this, who would be closing this in here expecting a trade back down? Taking their 21 points and running. What's your internal communication and psychology giving you right now? This is the only part, by the way, where psychology actually matters. When you have an effective strategy that works. Now your psychology comes in. Dealing with psychology without this and what you're looking for feels good, but it's you're running east looking for a sunset. You're gonna have a hard time. Because I can guarantee you, this trades back down and fails, Mikey's at it. If he hasn't already at it already. Right? Like this, we're seeing this, we're like, thank you. Like, let's go. Absolutely. I'm looking at this area here, this open of 31.50. If this gets defended, I'm adding my position. Right? The point is, forget what this says. Trade the chart. I do think this is overextended and we come back down. Right? But, I mean, based off of this candle, there's your 23.6. That's a valid trade in itself. That's your account grower. That's your payout trade. We waited this entire time for that. Look at this. If this accelerates through here, then I'm moving this up. Right? And in fact, right now, it looks like we're creating an imbalance, and I'm not even going to get my adding opportunity in here. But if this closes above this, then I'm moving this up to our higher time frame area of interest. We got 15 seconds. Definitely break even. Five seconds. Yeah. Okay, let's go up here. Right? I'm looking at the Wombo area. I'm looking at the confluence that it has here. But what else do we have? What other information do we have based off of what this is delivering now for our 15-minute time frame? Why are we getting aggressive? It's easy to get lost in the sauce in what we're doing here and getting with the attacking, but we just failed a low with the double bottom on the 15-minute, and now we're respecting the lower time frame Wombo combo. Let's go. Like, let's go. This is going to be beautiful. Right? So, hypothetically, we're not married to this trade just yet. As much as I'm in love with the potential of the setup. We've got this high. We've created a valid low. We need a break and closure above this. Why would we expect a closure? Because we've got a higher time frame move. TP1. Yep, absolutely. In fact, our biggest problem is we didn't get to add more size in here. This is our 5 contract trade. Right? Like boom. Yeah. Exactly. Right? We're looking to add to our winners. So now what do we got? We're going to follow this up and look to add in here. Right? So we're stacking confluence. We've got a valid swing here. Follow this up. Not even looking at this. Absolutely irrelevant to me. Very possibly a cheat code entry. Right? If you're not involved. If you're not involved. Right? Last structural bullish candle here. We're looking to see what happens. We've got our area of interest at 40. This one here, yeah. That's exactly what we're looking at. We're looking at this low at 48.25. We've now swept it, right? I'm still looking for this, ideally, but this is an area that if you're not involved yet, you're looking at taking that sweep failure. So the trade would be the aggressive sweep through here, and now if it trades through the open, this is an adding opportunity. Right? I think if it comes back through here, I'm long. Or if it taps into our pocket, okay? Oh my God. That was violent. Now, ideally, we get a closure inside of here. People were waiting for it to trade back down into this swing. That was an awful entry. Look at that. Nonsense. I'm going to move this to break even now. I don't think we get much lower. You'll notice the important part of this wombo is that we're not drawing it from here. If we drew it from here, guess what? We miss it. We draw it from the energy of the move. Energy of the move. We've got an imbalance here. We're expecting that to get disrespected, but we are looking at it. If we get failure, we probably go lower. SNDR is a stack as well of the Wombo combo. Right? We want the retracement to land inside of SNDR or inside of the midpoints of your zones. Yes, exactly. The failure to create a valid high in here, very higher time frame delivery. This looks great on paper. Obviously, it some days are a little bit trickier to manage, but in reality, we're looking for price to tip its hand what it wants to do and look to get involved with the new trend and find out whereabouts we expect it to go to. Now, who would be aggressive with their profit? Will we be taking it off above this high? Or are we going to hold for retirement? Right? We've got our disrespect of this imbalance. Cool. What else have we got? We've got our wombo that's respecting here. We're not respecting the bearish side. That's important. Trail below bull bar is going up. Okay. Yeah, we've got this for an area for sure. We're walking this up. In general, you want to sell on strength. Sell into strength. Buy in weakness when you have a bullish trend. Right? You have an objective. If this trades here, we're looking at this imbalance. If that imbalance fails, now we've got a different decision. This imbalance got disrespected. We're expecting this high to go. Right? So if you're going to take one off, I'm not putting it underneath this here. I'm looking to ride this to here until I have failure proving otherwise. Right? So my objective here is this high. Right? So if I'm going to partial out, this would be one area. Right above that high there. And this is awful. I don't expect it to trade back down to here, but that's possible. You'll notice we also have this, which is not a protected low. Can't believe they gave us 10 points of slippage on that. Yeah, so we're looking at this leg. This isn't part of structure. This isn't part of structure. The only structure we have is actually here. But you're right. In terms of our 15-minute time frame, we've got failure higher, failure lower in our higher time frame move. If we were swinging, this high would actually be our target. Oops. Let's go back here. Right? We're expecting the market to make a major decision as it trades back up into here. Right? And essentially what we're looking at is this area breaks. We don't short for the rest of the day. That's major bias. Pretty much. Pretty much. Yes, that, and for the same reason that we were looking at these wombo setups on the way out, we have to understand whereabouts the wombo is on the way down, which is here. Yes, we now have a valid high, right? We're expecting to trade back into this zone at 56.50, which we just did. Would you draw a wombo combo setup or a retracement leg from this? Not that way, obviously, from this. That's a question. Would you be looking at this? It's not structure. From the 5 minute least. Good. You might get that failing in here. And I think we can look at maybe price action if we get something like that. Right? If this goes sideways in here as it trades to this area that made a decision, you might have a hidden SMDR. Right? We'll see what happens with this low. We'll see what happens with that low. It very well could come back down to our entry. To answer your question, this violent movement, we're looking at taking, this would be an opportunity as well. Because now we've got structure that's formed, and we had another setup that happened in here, which is an adding opportunity. So adding opportunities are additional setups in your trend narrative. Right? For example, this would have been a long. If it traded up and failed here, then traded down and failed, that would have been an adding opportunity as well. The narrative would still be the same. The trade isn't invalid. We've just got multiple attempts at buying based off of failure. I'm still comfortable with this trade. Failing underneath here, I wouldn't be... I wouldn't say that this is invalid, right? In fact, I kind of expected to trade back down to this area that made quite the shove, right? We've already traded down into it once. I'm going to treat this trade as if I was executed in here. It might run this low. I don't want to see an acceleration underneath it, and then that would probably be my closure. Yeah, I agree. I don't want to be selling into weakness underneath this low because I'm expecting more violent movement up based off of what we're seeing in here. Right? We're failing to create a valid high. We've got our double bottom. We've got lower time frame wombos being respected. Right? I wouldn't add into this one here because I wouldn't draw it from this. However, if it gets respected, like, my goodness, we are flying. Right? But this isn't an adding opportunity for me here, no. And I think you'll be better off not looking at trades like that in here based off of the wombo with your guys' consistency. Right? If we sweep underneath this candle and we close strongly, then that might be a price action add. Right? We're getting sustained bearish movement from here, but again, we didn't complete an objective higher. We actually closed here. I see this as like a indirect manipulation of sorts. Right? Like, there's no reason for it to have stopped below here. I don't see this as being a major decision. Yeah, that's nasty. You might get a smiley face bottoming pattern here, in which case we fly above this high. Certainly not worried. Certainly not worried. Right? And momentum trading, you're seeing like strong closure, inability to fail. Like, people will buy the close of these for the push. People will buy the close of this bear bar, right? Or at least buy like something in here. Yes, underneath an imbalance, but risk to ruin is how I determine size for me personally. It's how many trades you, based off of your own system and how well you can execute your system live, how many losses you expect to take in a row or over say a course of 20 trades, right? If you have an average of, like, when you have a losing streak and you have, say, 5 or 6 trades in a row that you lose, and say you've got a 50K account, so you get $2,500 in drawdown, and you're risking, say, $250 a trade. Well, if you only lose 6 times, then you're fine with your current size, right? If you're risking $600 a trade and you have 5 losers, well, then you've got to size accordingly, right? So for me, I rarely take more than 3 losers in a row. So I size 2 to 3 contracts per for my 50Ks. And essentially I'm in, and then if I don't see something I like, then I'm gone, right? And if that means I miss certain trades, then I do. So I think, sorry, to answer your question without rambling, I think definitely confidence in the setup is one thing, but your A+ setups you want to size a little heavier on. Those are the ones you want to practice, obviously, but consistency in your trading will allow you to size up once you've got a buffer, right? Depending on what your buffer is. And you're actually seeing a lot of prop firms that are adjusting a lot of that too, where they don't want you risking more than a third of your profits on a daily basis, or they don't want you, going for $1,000 days and your payout qualification is like $3,000. They actually want you scalping. The majority of them want you scalping. There goes that one. I mean, this is textbook. This is working out perfectly. How do you deal with trailing drawdown when being in profit like earlier? So Apex is a scalping platform. Top Step is not. If you have unrealized drawdown, typically you want to be, until you have your buffer, you want to be sort of objective to objective trading. So if you're long here, you've got your objective, and often, sometimes that'll come back to, say, break even, but like for example in this, say that it would have failed above here, I would have taken it off. I wouldn't have allowed the unrealized trailing drawdown to affect me in this instance. Ooh, we might have to, the other way of looking at it is you're aggressively trailing your trades up, right? So you'll see in this instance, this traded back down. This is your attempt to sell off, right? So my personal method of trading, which is hard to articulate, but very effective in my opinion, at least. Just ask me. is I need the market to attempt. Target failed. Woo! I need the market to attempt to sell off. That allows me to go to break even. So in this, for example, say we're in properly at 44 or something. The market didn't attempt to sell off here. So I can't comfortably suggest even here that this is manipulation yet. I need that attempt to sell off that fails. Now I have confidence in putting my trade to break even. Right? And you'll notice after that attempt to sell off, after we got our body closure, we had a low, a low, a low, a low, a low, a low. In fact, if we were trailing our lows, we'd still be in this trade. And that aggressive way of trading doesn't allow for a lot of unrealized trailing drawdown. But that works typically for higher time frame moves. If you're trading small movements, then you're going objective to objective. So long here, out here, waiting for a re-entry. Okay, cool. Long here, out here. Does that make sense? Cool. So this is the area. This is the area. People are looking to short from here. Now, you could argue that it's not exactly ideal conditions for shorting this just yet. Right? What would you want to see? Again, you're trading against this. So if we're going to short, ideally what you want is a change in order flow. And then your target would be this prior zone. So we've got one objective here, cool. There's two ways of looking at this, and this depends a lot on your guys' personality and your risk appetite, and this is sort of what I implore as well. A lot of the very strong traders in our group will not short this, and that's fine. That's fine. We don't have to short back down to here, but if it comes back down into here, we'll definitely go long. Yeah, no doubt. What are we up right now? Ah, casual. Now let's push it. Let's push it. Let's go. It's Thanksgiving. Right? So the aggressive trade would be looking at this as inducement and then failing and then going lower. The smart way of trading this, you've got two different options. We've now traded into here. Should we get failure, you've got three different areas that you're looking at. Let's get rid of these wombos for a sec. Right? Fractal nature of price, love it. If we get a deep retracement, you're looking for something like this, as it stands right now, which is valid. Right? In order to get this, usually you will have a lower time frame break of structure that occurs. Study that. Otherwise, if you don't have a lower time frame break of structure, which would have to occur all the way down here, you're looking for lower time frame movement. So you've got your zone here. You've got two different wombos for the lower time frame. Where was the energy of the move in here? There's two spots. One's your 5 minute and one's your 1 minute. This is your lower time frame. Right? So if this area gets respected, we're actually not trading all the way back down to here, period. We're actually going higher. Why is that important? It's important because if we get a short, right? Let's say hypothetically that this gives us inducement and then fails, and we only go to here and then we respect this area. We go above this high, and you don't want to be short anymore. Ideally, that short delivers us down to this prior zone, and away we go. That short, when you guys get comfortable, might be something you take, but the majority will be looking for long. We'll take both in this if it sets up. Right? As it stands right now, I'm not interested in shorting this at all. The only reason I'm considering it is because it's in our area of interest and a prior swing. We would expect a retracement from this area. Whether that retracement goes down to here or not is dependent on the structure that's associated with this. Should we have, like this candle closed above, come on, this candle closed here at 475, that high was 450. Therefore, we've got an imbalance that might get tapped into, which then breaks the high. If we create a valid high here, underneath this candle, then we break it, then we break structure and do this. Now we're looking at the intermediate wombo from this entire leg. Right? Anything other than this, we don't trade down to here, in my opinion. Yeah, I mean, we've got our double bottom on our 15, which I switched off of. Where are you? Oh my God, this thing. Like, look how beautiful this is. This is going up here. And wherever our wombo is from this, which looks like it's quite a bit higher as well, right? So if we drew it from here, oh, we've actually already tapped into that one. Even better, right? Wherever this, God knows where, because we can't really see, but like, let's just even hypothetically say from here. That's a pretty good target. Anybody want to hold for 300 points? Right? I think we take that high for sure, but we're looking at how price should deliver internally. So let's see what we end up getting, and then this will be our last sort of look at this. All right, so do we create a valid high? Do we tap into this imbalance and respect? I think we go underneath this low regardless. We're certainly slowing down in this area. Market's deciding what it wants to do. Does it want to screw over longs or does it want to screw over shorts more? Just for happenstance. Fire it in the chat. Who's looking short here at all? Who would even entertain a short? Nope. Cool. Herbert, my guy. Okay. Herbert and I will take the short. Herbert and I will take the short. I'll wait until... Ideally, we want this low. If this low doesn't get taken, then that's actually even... Well, I don't know. That's a little tricky, actually. I would want this low to be taken, and then we've got an imbalance that's already been cleared. This looks like we're getting a little bit of consolidation. I definitely think we go above this high, 1175. She's having trouble. She definitely goes higher on this candle, I think. What do we got? What do we got? Could. A little bit of an SNDR if it wants to break this. Bum, 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 bum. Let's be honest, two things are going to get wrecked here. We got 1175, 1125. Looks like a bull flag. Oh. What do you think, Herbert? Oh. There we go. Okay, do I get wrecked or not? Ooh. Immediately. Well, I want to see what happens underneath this low. What is that? 503? 503. We better put in a valid high or I'm going to get wrecked. Let's put it that way. Mikey's over there laughing his ass off. I guarantee it. What is this guy doing? Right? Inducement. I definitely think we trade into this imbalance. What we got in the 5 minute. Ooh, we got what? 50 seconds? This is looking nice, actually. It's looking nice. Let's go here. You know what? Let's actually go prior zone 76s. That's a nice candlestick video number 2 for you guys. The 5 minute. We've got to create a valid high or I'm immediately gone. This sweeps underneath here, I'm out of here. Like 100%. We got 13 seconds. This is more of like a C plus level trade, even though it's in our Wombo combo. We got our inducement and everything. And the reason is because if this built an SNDR, we just created a valid high, so I'm happy. I'm going to move this to break even. So again, looking at trading down to this prior zone, we've got our well, that's actually a little tricky. I would say probably here. Say probably here. That was violent. That was violent. I'm a scalper by nature, so I take a lot of 10 to 20 point moves. But I size in heavy on A plus setups that have to do with the Wombo combo. Right? This isn't like this is a scalp I would take live 100%, right? With the understanding that the probability is that if I get what I'm looking for, I'm now looking at this being manipulation, and you know, you could argue that I should have taken, what was this, 20 points off of it, like, what is that, $800? Right? The high probability trade is going to be the long for sure. And while people are growing and looking for their first payouts, these are the ones that I will call out live. But in back testing, I'm kind of showing you guys sort of, we're trying to do a little bit more of a scalping series. People were asking about it, so I'm trying to show what I'm doing. What do we think? Are we still going lower? We got some inducement going on? Maybe to the long side. We still haven't traded back down to our objective, so I'm comfortable holding. We're respecting this order block. I like that. Right? Where's our trade invalid? That's the question we should be asking ourselves often. Right? To Christoph's point earlier, when would I look to not give up 15 points? When should I look to not give up 15 points? I'm definitely going to be pulling one here, yeah. This fails underneath this, I'm gone. Okay? Am I making you nervous? That's my superpower. Okay, so we got our body closure underneath this. I like that. We've got our lower time frame structure. If you're nervous about unrealized, I ideally wouldn't want it to come much above the open of this candle that closed underneath. Right? So maybe even one tick or something. If we sweep underneath it, then we've got a high probability that it would trades back up to this wick here. We haven't done that yet. Possibly. I'm going to speed this up. Let's see if we get our long trade out of this. Right, looks like we're getting inside candle. Okay, yeah, and stop. Okay. Now, we've had this move. Do we entertain another short? Here's your 5 minute. What are we expecting? New high. Definitely a new high. Right? So we had a C plus opportunity. C plus opportunity. Right? Inside of an area of interest, which is the only reason we considered this short aggressively anyway. Sweeping this candle with inducement. Trades through. Bang. Nothing wrong with that, but understand what your probability is. We're not holding this for 10 to 15 point stop. We're definitely not adding. Jesus Christ, do not add on losing positions. So now that this has happened, we're not entertaining short anymore. We didn't get our trade to here, but recall market structure 101. If we have structure doing this, this high does not have to trade back into here. That's an objective. But if we get this and we start getting this, well, guess what? Away we go. Right? Now, ideally, we get a sweep of this low. I would be all over that for a long, especially if we fail underneath it. New high. Socio stream. Where are we at? Yeah, these imbalances, that's definitely your jam, isn't it? Is your lower time of imbalances? All bad language, yeah. Thanksgiving, I should be a little less. That long got me fired up a little bit. Now, if we're going to take this low here, this is how we would do it. Otherwise, guess what? What are we building here on an intermediate time frame? If we range here, is our narrative higher or lower on our 15 minute? Definitely. So for us to really break out of this area, guess what? What do we have to build? What should we build? An SNDR. So if we continue to range in here, right, whether we sweep this, I think Stoic talks about this as SBS. This might have been it. Sweeping here, then sweeping underneath. Maybe we go higher from that. I think that's valid. But essentially what we're looking at here is we're building an SNDR to break this SNDR here, which gives us an extremely powerful area of interest. Extremely powerful area of interest. The fun thing about these SNDRs is it makes it challenging to go long because it's unlikely that we take this low. I'd love if we did. I think that would be a very high probability area of interest. We're sweeping above this last structural candle, but then we closed here. We've now created a valid low and a valid high internally, which means we're ranging. In fact, you kind of knew that here. I love the order flow change. I'm just not wild about the 5-minute imbalance. And that's probably the main reason that I'm not considering this short. I do like that it didn't tap into our last objective for the short. I really don't like that imbalance. I think that if we continue building this range, that we run above this high. Certainly above that one. And if I miss out on all this by not taking the change in order flow back in, like you could definitely argue this, right? This low put in, like traded above. We've now broken order flow. That traded back in, probably to a wombo area, right? You've got this here. Oops. Come on. Like beautiful short opportunity for confirmation. I can't justify a long because we've got order flow. Wow, order flow broken. You could argue we've broken order flow to the long side, but you'll notice in these ranges that looking at that is it's not ideal. It's not ideal. The first the first retracement that you're looking at after the order flow break, that being respected, exactly what we wanted. I wouldn't look at this one being a retracement of this. Am I ever going to draw these accurately the first time? Right? Like I wouldn't, even though this paid right to the 23.6. And then that probably was the one from here. 23.6 lines up. Okay, so you've got multiple retracement setups in there. Love it. Right, but I'm very hesitant from my back testing to draw those retracements in a range, even though they do end up paying. And this looks like it's flying now. Whereabouts did the market make a decision? Right, you've got your valid swing here. This is your SMDR. Ideally, we get a trade back down to this area where the market really made a decision. And if we're drawing our area of interest, here's your energy of the move. That aligns with this. So this would be an area I would look at for a high probability long. Let's get rid of this now. It's done its job. We definitely, in my opinion, very high probability we go above this high. And if this SNDR does not break it, then I don't go long for the rest of the day, even in this area of interest. Because if we're building an SNDR to break an SNDR and that SNDR does not deliver, then it's doing the opposite of what I expect, and therefore the opposite is happening. Which means we likely continue short and break this low. I think that's low probability because of the higher time frame double bottom that we had, right? This I'm expecting to run this high and then beyond. So this makes sense to me in how we're delivering it. If something doesn't make sense, not only am I not scalping, but I'm not interested in the long side anymore. Is anybody long right now? Or are we waiting for this into here? Or are we looking at this maybe being short? We've got our fractal here. Is this an A+ setup at all? Is this a smart idea going long here? Yeah, if it sweeps this, I'm definitely interested, but we have to understand we're longing whereabouts we're longing from. Right? Now for me, that sweep, call it underneath 10, let's say 509. Right? We've got potential 20 points. At minimum, we had this, which has now been taken. I don't really want this to be messing around in here. I want SNDR built, we should go. Right? Now, what you'll notice is, number one, that 5-minute imbalance delivered. As you guys know, I don't trade off of imbalances. I was looking for this, and I didn't actually end up justifying any longs in here, which is annoying. But you have to structure your trades not just based off of where you expect the market to go, but whereabouts you're looking for. Right? So this ends up no structure at all in the 5-minute. And the 15-minute likely the same, right? Just a straight push from failing this low. Right? So the inability to create a valid high here after this would be something we would lean on heavily for sweeping. And you could argue that this candle here that swept underneath this, participants would have been buying in here because they would expect any movement down to be just profit taking on a higher time frame delivery, which looks like it's going to take that high. Finally, who could have predicted this? Right? Despite not being involved in anything except for one short. Annoying, but I'm not willing to get involved here when I'm looking at the potential of this low into an area of interest. Why would I risk an extra 10 to 15 points or a probability of a stop? Likewise with this. I'd love if it traded it back down into here. It tapped into this fractal and then left. Cool. But for me, I needed this area, which means that I pass on it. I don't know about you guys, but there's been a lot of days where I've been like shorting in here or shorting here, expecting the movement back down. Our objective is here. So for us to entertain a short, like this area, that retracement on the Wombo into here was an objective. So I can entertain the possibility of a short because the objective, in my opinion, was completed. When we built an SNDR, our new objective is this high. Therefore, I'm only looking for longs until that objective is done. That doesn't mean that I'm shorting the close of this candle because we just completed an objective. But we want to analyze the reaction from it based off of structure to form higher probability decisions. Equivalently, I'm not going long in here just because it's messing around, despite the expectation of it continuing higher. And I see a lot of, well, why don't I just buy here? Look at it. Well, okay, but is it going to do that tomorrow? If we backtest the 5th of October, or August, sorry, is it going to do that exact same? Probably not. You have to be able to replicate it both in real time and consistently. We'll see if we find one more trade in here. I definitely think we retest this area of interest. Oh, did they? I haven't seen a lot of them. I think they're a decent trader though. I think they trade more stoic stuff though. Looking at this area, I don't think we get the trade back down into here. And anecdotally, we could probably look at the energy of the move from here. Okay. Do we have something like this? Possibly. Let's speed this up, and then we'll see if we can find one more trade. I'm definitely not entertaining the short. You could probably anecdotally say the midpoint of this manipulation leg would probably get something, right? Or like something like I don't know, something like this. Cool, right? But I'm not interested. Back down to our area of interest. Now, are we expecting? We've got no valid structure here. We would have to trade underneath this SNDR. So we're kind of looking at this, aren't we? Right. So let's take a couple of scalps in here. So I'll just go 10 to 10. We'll do a couple of scalps and we'll end this. Right, so we're in here, we're inside of our SNDR, we're inside of our Wombo pocket. It looks like we're failing. And looking for it to, yeah, probably break even now immediately. Target filled, love it, okay. And we're looking at the same sort of thing on the short side, right? Even if you would entertain shorts, right? We would probably need a change in order flow in order to do that. I mean, we've broken this, which I think is important, right? So if we're going to retrace down, we're probably going to be looking at this area here, which looks like it did not quite tap me in. I'm definitely not shorting now. Let's go. Beautiful. Do we have any Mikey imbalances? Do we have anything? Not unless we go underneath here. Five-minute Wombo from this? Possibly. Yeah. Lower time frame structure. From earlier now after the noon move. Noon move. We're not even at noon yet. Yeah, you take some fire there and his nose at a point. There we go. Okay, let's speed this up. We'll see if we take our high, and then we'll call this for today. Ooh, didn't quite get it yet. Did we get inducement fail? From all finish for the afternoon. Oh, gotcha. Yeah. Ooh, 83.5. Ooh, nasty business. SNDR built, maybe. Ooh. Look at that, though. Look at it. See ya. Who could have predicted this? All right. Questions? Anything you guys want me to go over while you got me here? No, we just want the recording? Review. So, looking to take trades after 950. We had manipulation, spiked, SNDR built, traded back into it, left, cool. Lethargic movement leading to a spike above this high, but that was met with a higher time frame dump. So the decision made after we trade into here is either we go above this high or we fail and go lower, and fail we did, right? So we're not terribly interested in this because we don't really know what the market's going to do, right? If this came back down, respected, and left, then fair enough, right? Then we're looking at this high being taken. Instead, we left. We took a trade in here. We ended up making a little bit of money on it. Not quite what we were looking for, but that was just to kind of illustrate location-based trades. We're looking for longs based off of our intermediate time frame. So what ended up happening was we took this low. We're not interested in getting in at the bottom. We had a higher time frame move. We're now looking for retracements to get involved in the new trend with the change in order flow. So long, got it, cool. We got another long in here, we got it. We took one off above this high because we were expecting this low to go. We didn't get a chance to add in here. Instead, we left, trading up to here, getting our inducement short, got some money out of it, lovely. But we built an SNDR in here, right? So that intermediate SNDR, its purpose should be to break the SNDR to the left that was also intermediate, right? Which was responsible for breaking structure over here. So SNDR that breaks SNDR, very important and powerful area of interest. We then built an SNDR lower time frame to break this, tap back into it, and it looks like we left here. So the takeaway from this is kind of twofold, I would say. Number one, we're looking to get involved after price has tipped its hand, not before. We can speculate what the objective is. Maybe it's mitigating this midpoint. Maybe it's trading back into here and leaving. Maybe it's the pocket of this zone. However, we need to see price support that narrative. And if we don't, then the market's not wrong. Guess who is? Okay, so we had our higher time frame move in here. This is aggressive, which then broke structure. We're now looking based off of the 15-minute low, not just how price is moving here, but based off the 15-minute failure and no structure. We expect the market is telling us here after failing that we're going higher. Failure here, lower. Failure here, higher. And now we're looking to get involved at areas that we can properly risk off of in order to continue the trend. Right? Until we had this SNDR here. Now we were very quick to take this short off. Why? Right? That second distribution should have been violent. We took one off here. We didn't get that violent, which means we're ranging. And if we're ranging right underneath a protected high, guess what? We're building something to take it. And take it we did. Right? Now, there was probably an opportunity to short in here, or at least on this tap. But I'm not interested. When an SNDR breaks an SNDR, I don't trade against that structure for the remainder of the day. That keeps me out of fighting things like this. But more importantly, it also keeps me on the right side of the higher time frame trend, and I'm not focused on managing my short positions and missing longs as a result of it, which typically tends to happen. Okay. Now, any specific questions with this? What would I say were low risk entries? I think that this one here was ideal. I think this one here was ideal. I think that typically your best low risk entries are when you can pair stacking confluences. So this one, I mean, this trade looks phenomenal in hindsight. In live trading, we don't see that like that doesn't happen obviously every time. It doesn't happen a lot, but it doesn't happen every single time, right? Because we're looking at the midpoint of the energy of the move. So this trade in reality, like, could have been at 1550 and this low was at 1575. We might have missed that by a tick if we had a limit order. But in reality, like, putting a limit order at 18 and getting 2 points of drawdown is outcome based. We want to look at what is going on here that makes this a very high probability entry for us to take. And then sure, like, the low risk comes after that, but what we're looking at here is we've got this SNDR that was responsible for breaking above this high. It's inside of a pocket. We now have 15-minute failure. There's about 3 or 4 things that make a retracement into this area high probability. And the market supported that almost immediately. Right? So essentially, if we're looking at taking this trade, this might have liquidated this SNDR, in which case we would have been 5.5 points under of drawdown in there. But like, I think taking this long in here with a 10-point stop, you would probably have about an 85% probability rate with that setup. Right? This is a trade I will take live with size and look to add if possible. Every time. Every time, every time. Any other questions, lads? I think I just answered both of them with one go, hopefully. Can you explain when you see the behavior of the candles they don't act as you want and take you off your position or set stop to break even? Excellent question. Also a loaded one, right? Because essentially what you're asking is for me to condense short-term narrative into an answer, right? And there's no kind of real one-size-fits-all approach. For example, when I'm looking long in here, before I hit the button, I know exactly, I have to know, we all have to know, not just me specifically, obviously. We have to know what conditions we're in. If this trade works out, what's it going to look like? Is it going to consolidate for a while and then run? Or is it going to trade down, immediately trade back up, something similar to this? Right? And the conditions of me hitting the button, what that looks like, determines the behavior that I want to see. If I'm in bearish PA and I'm expecting a volatile move to make money, there's a certain probability associated with that. And if I see anything contrary to that, for example, respecting an imbalance, gone. Versus if I'm long in here and I see a valid low formed, I'm not terribly concerned if I see consolidation occur in here. Right? I'm looking at this trading down, and if this fails underneath, like we're gone because of our narrative and our context and everything that we're looking at. And the market has to work very, very hard for it to break that narrative. We have no structure here for us to look at this high being the final move. We might get a retracement and we can look at, the Wombo area from it. Say we're drawing it from here, right? Even then, didn't work. right? So what I'm looking at in terms of objectives determines my framing of what the market's doing. If I'm expecting it to trade up to here at 500 and I see a bear bar, that's very different than if I'm expecting it to trade below here and I see a bear bar, right? So essentially what I'm looking at is not just what the market is doing, but what the market's attempting to do and if it can fail or not. That to me is probably the best way for me to answer, although a little bit vague. And what I mean by that is that if the market attempts to rally after this move down and it fails to rally, now I'm looking at potential failure, and now I'm looking at lower objectives than just something short term. This trading into here, sweeping and failing under this, okay, if this candle ended up being like an awful candle, or the response to it was violent, now I'm a lot more aggressive with where I'm taking my profits, because I expect bullish movement to be met with bullish movement in this context. Otherwise, my narrative is wrong, my context is wrong, and if the opposite is happening of what I expect, like if I want to see bullish PA and I'm seeing something opposite in areas that have proven from short-term areas that that bullish movement has occurred, now I'm very cautious. Now I start protecting my position rather than being aggressive. I see failure underneath the last structural bullish candle and a strong movement closing here. I'm extremely aggressive. Extremely aggressive, right? Something similar to this. If this candle would have ended up being bearish and closing here and then we had follow through, I'm very likely taking something off or at least break even on a position here. Whereas here, I'm still looking at targets higher and being very aggressive with my opportunity. Does that make sense? It's probably a mouthful, and I do apologize, but it was a loaded question. Essentially, what we're looking at is expectations of price with our short-term narrative, which is a huge topic. So I can understand if it's very unclear, because essentially what we're looking at is candlestick theory in terms of context and narrative. And if we understand that, well, then we're flying. That's where like 20K weeks come in. Can you explain with another example that you don't shorten a bullish trend until a trigger by objective being met? Yeah. So if we're looking long, we're looking at whereabouts our objectives are. Right? So if we're here and we see failure, or even if we don't see failure, we just expect failure at some point to do what? Trade back into the prior zone. Right? So I'm not looking long off of this candle. Why? Because I'm expecting lower prices to trade back into the prior zone. Because that's its objective. That's our narrative. So if price is trading up, it's not just trading up because it's a whatever day this was. It's trading up to go to an objective. So if we know that an objective is here, and hypothetically, we're looking at the market doing this, when do we go short? Do we go short here? No. Go short after you get a trigger in your objective with your narrative that price should be trading lower to its next objective. Objective completed, objective completed, objective completed. And then we monitor price action associated in here to determine what higher time frame, what time frame the objectives are on. For example, this candle here, for me, if this was going to trade back down, right? Now I put my stop here, which might have just got wicked out and this could have closed poorly, in which case great. Right? Like, we're looking at this, this candle, for me, determined that this movement was not of a higher time frame. So in other words, now I'm looking at this movement as being short term. This was a short-term narrative, which I expected to be under here, or at least that high being 80.50, and our trade only went down to 85. It didn't even trade into this prior zone. Why is that important? It's important because if we're looking at shorting in here, this move is not sponsored by the higher time frame. This movement is sponsored by the higher time frame. So if we're bullish and we say that we have a probability, say, of 70% of this trading down, we need to be taking trades based off of confirmations inside of an objective. And if we're wrong about that objective being hit, and the objective might have been to take this high, and we don't build an SNDR, whatever the case may be, then okay. But shorting here without a trigger is just as silly as shorting without having an objective met. For example, here, price has tipped its hand. We built an SNDR, we're going higher. We've studied structure, we know where it's going. Why are we shorting in here? The objective hasn't been met. We have a very high probability of taking this high. And in fact, there was probably, like, this here was likely a retracement up. Right? Whether we take it or not. Barely touched into it, actually. 41.50. Right? Objective met. Change in order flow. That doesn't mean take every change in order flow short. But it certainly means that we're not shorting here. I don't care if there's a bear bar. Not shorting in here. I don't care if there's a strong bear bar. I need an objective met.